Welcome to the One Take Conversations with Global Mobility Leaders. Today, I have the privilege of speaking with John Habanek, Executive Director of Sales Strategy and National Client Relationship Manager at Chase. John, it's only been about a week since I saw you last at BAM in
Right.
the Bay Area.
Yeah.
Nice to see you again, and thanks for joining.
Good to see you again. Thanks for the opportunity to talk. It's a time of momentous change for this industry. So congratulations to you again. I think, that the strategic thinking that you bring to this table for the constituents and how do we drive forward, like you're the right person for the role. So
Oh, you're kind.
be stoked. And also just selfishly, I love talking to you because you inspire me and you challenge me and it's always insightful.
Listen, right back at you. You're taking words out of my mouth. So I'm thrilled to be chatting with you today, and thank you for taking the time.
Of course.
Let's get right into it. John, want to talk more about your business. Obviously, we never lose an opportunity to talk a lot about all kinds of things, pontificating on the meaning of life and such. But let's talk about your business today, which is not something that you and I have done a whole lot of as often as we've pontificated on the meaning of life. So Chase has been a significant player in the mobility industry for what, over 20 years, I think.
Yeah.
Tell us more about Chase Home Lending's role in corporate relocations and why companies have trusted Chase for as long as they have.
Yeah, sounds good. I'll start maybe with a history lesson. So, like, we started with this business in 1998. We really doubled down on it around 2009. I was a lending manager at the time, so I was leading our home lending advisors. And the business, we had three of them to support the entire business. You
Wow.
fast forward to today, we have grown to a team of home lending advisors of nearly 700 because, we needed
Holy,
to.
wait, pause. 3 to 700.
Yes.
My gosh.
And I'll
Okay.
tell you a little bit more about why we did that. But we want to continue providing like triple survey award winning service to our clients. All the way from origination to closing to funding and on through servicing. Our servicing organization is very, very highly ranked, and we see that as a true like differentiator. You think about a mortgage, let's call it 21 days to originate, and people, so 30-year terms are pretty common. People keep their loans for 7 to 10 years. So if you think in the scope of things, like 99% of what happens after the mortgage closes, right?
Right.
And the whole power of the firm to that. So, we're going to nail the closing. We're going to get them done on time. We finish everything on time, and then just keep on providing an excellent service through just the entire relationship. Personally, I have a team of 11 B2B biz dev salespeople across the United States. They're actually split up between 3 sales folks, regional sales directors, and 8 client account managers servicing the day-to-day relationships between our home lending advisors and the corporate client or RMCs. Some of my new hires recently, and I tell you, like in Q4 of last year, I think I really built the dream team. So I'm pretty proud of where we are. I think you asked one more
That's
question. You asked a question about why we're trusted.
Yeah. Why
Yeah.
why do companies trust you for what 20 plus years that you've been doing this? I guess one of them is 3 to 700 people. I mean, you must be doing
Yeah.
something right, but why don't you tell us?
Yeah, I've said for years that this big blue octagon walks into the room before we ever do.
Hmm.
And when you think about it, JP Morgan Chase has been in business for over 200 years.
Right.
We've got world-class service and products. We've got a very highly financially secure organization with Jamie's fortress balance sheet that he's always talking about. World-class cybersecurity and a very highly regulated industry. And like, everyone says their people are great. Well, our people are awesome too. Like, they're really just tremendous, compassionate people. They care about the customers. It's a relationship thing for us. So I think that's why people trust us. It just proof in the pudding. My talking points here. Fortune magazine for 2 years in a row has placed JP Morgan Chase in their top 5 of the most admired companies in the world. So we're
Oh
pretty
yeah.
proud of it.
Wow, that's awesome. Look, all of that. I mean, most people are aware of the huge role that Chase plays, JP Morgan Chase plays in our industry, but the economy at large and actually on the global stage as well. But let's try to make it a little bit more specific to the relocation process. So if you can just maybe talk a little bit about what are the specific benefits that the Chase Home Lending business offers to employees specifically during the relocation process,
Yeah.
because it's at the end of the day, really making a mark with the employee. So
of course, yeah.
that's more
So,
relevant.
I think about it in four ways. The first is that we've got a robust product suite to support every type of buyer, whether they're first-time home buyers or seasoned transferees, and then employees across a diverse economic spectrum. So you've got folks that fit everywhere in there. A case in point, we've got a bunch of different types of mortgages, like most mortgage lenders do. FHA, VA, conventional, jumbo loans. We hear frequently from corporate clients and RMCs, what are you doing to make housing more affordable? We have some great affordable mortgage options. We call it Chase's Dream Maker Mortgage, flexible guidelines, 3% down payment. For the transferee, we've got dedicated swim lanes. And when I say that, I mean like we've got our fulfillment side of things carved out from the fluctuations up and down of the refinance market. So our operations, our closing, our underwriting, our funding, like all the way through the process is separate. And so we can provide that service without people thinking about all the other things that are going on. Like for our RMC clients, we do direct billing of closing costs. We'll do subsidy management if it's in the corporate client's policy. So those are the kind of things that we bring to the table for. Like that's the first kind of the way I think about it. The second, like these next couple are like where I think I'm the most proud of because I think they're really making a difference. The second way is it's pretty widely known at this point that the best way to build generational wealth is through home ownership. So we have a home buyer grant program that's up to $7,500 on any purchase located in more than 15,000 majority Black and Hispanic neighborhoods across the country. The grant can be used to lower the interest rate, cover closing costs, put towards down payment, et cetera, and combine with any other local government or housing assistance programs. So we work with a ton of these things. So when you hear we can't afford a home, that $7,500 goes a long way. And combined with local assistance programs, it's really a big deal. So like, if we don't think that's applicable, you could argue, does it matter? When you think about, I'm stressed out about moving and all the things that go with relo that we talk about, we can make that easier, which is pretty cool, right?
Yeah. That's pretty amazing, actually. The Dream Maker thing it's great marketing, but
of course.
the concept of Dream Maker and helping people create generational wealth. It sounds like, just doing this quick math, if I'm not getting it wrong, it's over 100 people that you've given those grants to of up to $7,500. So that's a lot of people.
Over 200. Really, yeah, 214, I think, is the number that we hit last year. And we expect to do more with it here. We just raised the grant from 5,000 to 7,500 in specific tracks. So
gotcha.
It's out there. We're going to do a better job of marketing. And quite honestly, I don't think my team and myself personally have told the story the right way. So we need to get out there and tell that story. This is an opportunity to do so. So thanks for that.
Yeah, for sure.
The other things I talked about. So just real quick, there's the two other things. So we have a digital experience called Chase My Home, right? And it won an award for best use of IT and lending. It's like a 360-degree digital ecosystem for our explore, buy, and manage is how we think about it. And the transferees are busy. They've got many different ways that they want to work with us. This is a way for them to get in and look at houses. We've got a home finder in there. You can pick certain houses. It'll email you updates on price changes. We've got a bunch of mortgage calculators. Interesting enough, like people love the mortgage calculator because they can self-serve, right? They don't have to call somebody or have to talk to somebody, which is pretty powerful. So there's that. And you can also, the home buyer grant find there. So if you don't want to talk to anybody, you can go in and see where those grants are that I mentioned earlier, right? So we're just trying to make it frictionless for people and easy.
Yeah.
And then the last thing is we truly believe in like homeowner education. And so if you got transferees that have never moved before, maybe never bought a home before, or haven't moved in a long time, we've got a home buyer assistance finder. We've got home buyer education center on there. We've got a podcast called Beginner to Buyer. So there's like a lot of educational resources out there that I think maybe change the public perception about mortgage companies.
Oh, that's awesome. That's quite a lot of stuff, but it makes a lot of sense, and kudos to you guys for I really like that that element you talked about in terms of helping create generational wealth. It is important and necessary, I think. So I didn't hear you say anything about, we're hearing a lot about, have been for the last 3, 5 years in our industries, this move towards lump sum. Uh, so what, if anything, are you guys doing by way of helping employees maximize, their lump sum benefits during relocation? Is
Yeah,
that
good
is that a
question.
thing?
Yeah, it's totally a thing. It's been like you said, increasing uh, as more of a go-to than the traditional guaranteed buyout, full service kind of benefit thing. And I think we're probably going to continue in that direction.
Hmm.
So, like, we do special training for our folks, all those home lending advisors, and there's a reason they have advisor in their name. So they're experts in the local markets. They're experts in ways to stretch that money. Um, Relocation is expensive. Like, I know
Yeah.
that personally when I moved from Ohio to Arizona, and that lump sum money only goes so far. Again, I know that personally because I moved from Ohio to Arizona. Um, so what we do for relocating lump sum transferees is we extend our relocation rates. They're lower than like Gen Pop rates, if you will. Negotiated processing fees. They're basically half of what you'd get if you weren't a relocating transferee.
Wow.
And then you give them the whole swim lanes that I mentioned earlier. So like even though they don't get the traditional relo experience,
Hmm.
they get the traditional relo experience because we're here to just provide the same thing for them. So help them stretch that money and hopefully see if it can go a little bit further. Does that make sense?
Yeah, that's pretty cool. Half the processing fees. It's impressive, commendable. Thank you.
Thanks.
Okay, cool. Well, let's change gears a little bit. I think you know that I've trained as an economist, and I love talking about economics and actively follow it. So why don't we change gears a little bit and have you look into your crystal ball that you told
I
me all
knew the
about?
crystal ball question was coming.
Well, listen, you claim you have a crystal ball. Or actually, you were denying that you have a crystal ball, but I heard crystal ball. So let's go to your crystal ball and share with us your thoughts on the mortgage market, the trends, and what JP Morgan Chase's outlook looks like for the housing market and the mortgage market.
Yeah, will do. I mean, yeah, I walked into this one talking about the power of the firm and all the smart folks here, didn't I?
There
Um,
you go.
We'll start with so that across the housing industry, market experts expect a gradual rate decline over the next 5 years. But you're going to see some fluctuations up and down, as we've already seen this year and over the past year, influenced by inflation, Federal Reserve policy, economic growth. An election year always changes things, and then you've got a number of other countries that have purchasing U.S. backed treasuries, so that affects the mortgage market because they somewhat run in tandem.
Yeah.
So we try to educate the home buyers, like, look, it's a difficult time right now. We're here to help you. So when the
Well,
rates drop, like, we can pull the trigger. You call us, we'll call you if there's a target rate, and we can go from there.
mm,
Uh, so those are the things I would think about. It's just an ever-changing economy, as you know, and it's hard to predict the future. If you would have asked me in December, I would have expected the rate environment to be much different this year until the
yeah.
Fed came out with some of the signaling they did earlier this year that said, maybe not so fast, right?
Yeah. So are you basically saying that or you all expect the rates will hold for a while longer, whether it's 12 months or what have you, because the Fed's not moving or likely not going to move. Looks like inflation
Right.
isn't quite coming down the way we were all hoping it would, as quickly as it would.
Yeah.
So rates, okay, fine. Well, not fine, but it is what it is, I suppose.
Yeah, I think people are starting to get more used to it than they were when that big spike happened at the end of 2022. Everybody panicked. This is the end of the housing market. Um, it starts to become the new normal, so to speak, and they get used to these smaller fluctuations up or down. So it's best to just
Oh,
call somebody who knows the industry, and we
yeah.
can help guide people through that, and maybe take some of the fear mongering that you might see in the more mainstream media out of the picture.
Gotcha. Let me ask you another nuanced question just on that point. Has there been a change in underwriting policy for Chase as it comes to mortgages? I mean, have you all like become more conservative, less conservative, status quo? Like,
Yeah,
how's that
good
looking?
question. Yeah, it's a good question. So I don't know. You might have remembered there's a bit of a crisis in this industry around 2008, 2009.
A little bit.
Um, And we've always been fairly conservative because we think that's the best way to run a business. That's why we've been in business for 200 years. So the pendulum swung very far to the conservative side of things, to the point where we were getting feedback from our people, from transferring employees, like, the other guys aren't asking for that. You didn't ask for that last time. You can only talk it off so much. And so as we've proven with our underwriting standards to the agencies and investors, like, we've got a super robust controls organization. So like our default rates are very, very low. We started to say, well, we should make this easier for the consumer. We're out here trying to help them buy houses. Like, let's get more open-minded. So we removed a bunch of overlays that we had on credit policies from the agencies and investors to make it easier on people to do so.
Gotcha. Okay, that's good.
And it's a continual evolution. We have got a whole product team upstairs here in Tempe that's looking to make things smoother for folks.
Yeah, glad to hear, because it had gotten pretty painful in the middle of this decade, or early part of this decade, I would say, the first half of it. Okay, cool. Let's switch gears again. Keep you on your toes. So you talked a little bit about this already, but let's see if there's more you want to add to it. Chase's commitment to social responsibility and sustainability, two separate pieces, but it's sort of in one vein. So obviously you guys have made a pretty significant commitment to racial equity, inclusion, et cetera. There's, I think, the $30 billion figure that is the amount of commitment that you've made to racial equity. How does that translate to? So you mentioned the example of the grants. Are there other ways in which it's translating into sort of your value proposition or offering to employees during relocations?
Yeah, good question. I touched on it a little bit earlier, but I think if you're paying attention to anything, particularly what your clients are asking for, ESG has been a big talking point or a hot topic over the past couple of years. So what I found is that corporate clients and even RNCs alike want to work with a company who aligns to those types of values, so they can say, look, our suppliers are doing the right thing. And I think that's resonated with our folks. So like the $30 billion, we came out in 2020, so we're going to donate, or not donate, but do a $30 billion commitment over 5 years. And it wasn't just like stroking a check and saying, we're done here. Like, we use the whole power of the firm, right? So trying to uplift Black, Hispanic, and Latino communities and provide opportunities in sustainable home ownership, affordable housing, policy advisement to federal and local governments, trying to actually work with small businesses, coach them. We've got a lot of coaching programs going on for small businesses because they haven't gotten that in the past. So we wanted to focus on that. And then just generally financial health and equal access to banking. Just we're trying to put the whole power of the firm, right? Yeah.
Got it. So it's beyond just the mortgage business. It's across your lending business and advisory and so on. Okay, got it.
Yeah. All 4 of our world-class franchises are involved. We've got the JP Morgan Institute, which is a think tank that comes up with, they do a lot of research and provide policy recommendations to governments around the world.
Gotcha. Okay, cool.
Did you mention sustainability? Do we want to talk about that?
I did. Yeah. Let's jump to that. So, what are y'all doing as it relates to, aligning your relocation services and so on with the commitment that JP Morgan Chase has made to addressing climate change and sustainable development?
Yeah. I think about it in high and low. So like at the firm-wide level, we believe that the business sector has an important role to play in this, in advancing the transition to low carbs. So low carbs as well. If you're
low carbs,
watching your figure.
Listen,
as a firm, we're applying our capital, our data, our expertise, and other resources to promote long-term innovative solutions. So like, as an example, we're aiming to facilitate $2.5 trillion with a T to address climate change and contribute to sustainable development. It's like $1 trillion goes towards green initiatives over a 10-year period. And then collectively, just as our track record shows, we've financed and facilitated about $482 billion towards the target. Like, that's a high level stuff, right? And that touches everything we do, because the nice part about working for JP Morgan Chase is that while my team we kind of straddle the B2B and B2C world. Many of our corporate clients are also clients of the investment bank, the commercial bank. We bank the company. We also help their employees. So I guess maybe a relo example. Chase My home property searches. You can go in there and do a lot of work, so you don't have to get on a plane and fly across the country twice, 3 times. So we're saving the company money on home shopping trips and hopefully lessening some carbon footprint.
Yeah. Those are some big numbers, my good friend. $2 trillion. You're just showing off at that point.
Yeah. Well, my PR team made sure to give me a couple of talking points to hit the whole firm, not just the Blue Octagon side.
Fair enough. Fair enough. You got to do it. Okay, cool. Hey, I think we're approaching the end of our scheduled time, but want to see, is there anything else on mind that you think we haven't touched on that's worth talking about here? I mean, I have one other topic, but I want to make sure that we've covered everything that's on your mind.
Yeah, no, I think we covered everything that I had planned on talking about. I did just want to thank you again for the work that you're doing, both as chair and now CEO, to make sure you're adding value to the constituents, to all of us that support the organization. So, like I said, you challenged me today. I'm assuming you're about to challenge me again, but the strategic direction you put in this organization, we're on the right track. We're moving forward. So thank you. It's
I
important.
appreciate it. Yeah. It's listen, it's not, none of this is gonna work or going to amount to anything if it's not for all of our members and all of the active engagement from leaders like yourself and all the members that we have, the wonderful members we have. Because, like I say, at the end of the day, it's about, it's for the people by the people. So we're just here to help make it happen. But I appreciate that. One last question I was going to ask you about was, and of course, knowing me, you would expect it to sort of be predictable somewhat. But are you able to talk at all about what you call in your business? You don't have to talk about Chase, JP Morgan Chase at large, but in your business are doing by way of evaluating and maybe starting to deploy tech, AI, Gen AI, or other kinds of technology that's cutting edge?
Yeah, we've been tech forward for years. I think Chase My Home is a good way of just kind of a tech wise. But when you talk about generative AI and those other types of things, we've had optical character recognition, looking at tax returns and those types of things over the years. They're more accurate than human beings in some cases. We're running pilots right now that looks at appraisal reviews, right? So we're like a third of our appraisals right now are being reviewed by robots, and they're actually turning out great results. Very, very accurate and very quick, right? That's the nice part, is that it doesn't take all this time to do it. So those are just kind of two examples that I think of.
Okay.
And,
all right.
And I was at a senior leadership meeting before I saw you in Orlando, or where were we? In San Francisco last
San Francisco.
week.
Yes.
And talking about where AI is going to go for us, and how the whole organization, but specifically home lending, we're building that out right now and hiring, if you know any folks that are highly skilled in that area.
Hey man, I am too, so let me know. But that makes a lot of sense. And actually, part of the reason why I asked was because the mortgage process is pretty intimidating, right? So for anybody that's trying to buy a home, it's another thing that you add on. And like if you're going through the process, it's an insane amount of paperwork, a lot of diligence that you have to kind of go through and so on, and it takes an enormous amount of time. If you can, it's sort of a classic use case for leveraging advanced technologies to make it more efficient, less painful, and actually maybe more pleasurable, if you will, at some point.
Yeah. I mean, I can imagine a future where, I think you're always going to need relationship people to help steward folks through the process, right?
Yeah.
But all the back office stuff, the processing, the underwriting, those types of things, I see that changing, not 5 years down the road, but like very, very quickly. So, and with the customer in mind, right? The transferring employee in mind, in my business specifically, but trying to improve the experience and economics for everybody.
That's awesome. Look, you, the audience, heard it here from JP Morgan Chase, John Habanek, classy first class gentleman here. Appreciate you taking the time, John. Again, I always enjoy my conversations with you and look forward to the next one. I'm sure it's going to be sooner than later, and reach out anytime you want.
Right on. I appreciate it.
Good seeing all of you.